It's been a very interesting and volatile week for gold. Gold, which is traditionally a safe haven as far as the market's concerned, acting out of character over the course of the last week when we have seen severe risk aversion in large parts throughout the market. While we have seen this risk aversion, rather than peaking to the upside, gold has come under considerable pressure, moving from close to 1700 where it approached at the start of the week, back below at one stage, back below $1,600. Now, while this was only brief, it very much goes against the consensus view that gold is a safe haven in times of risk aversion. And last week, we certainly saw plenty of risk aversion. Now, I'm sure there's plenty of reasons why we did see this, and a lot of it is just speculation, whether we're talking about margin calls leading to the positions being liquidated, or whether we are just simply talking about losses elsewhere being effectively covered by selling other positions such as gold. There's plenty of reasons why you could potentially explain the movements that we saw that which were considerably out of character as far as gold is concerned, and I think the movements which we've seen, for example, in treasury markets may also go some way to explaining it. But we are starting to see a little bit of stability back in gold once again, and potentially if markets continue to calm down just a little bit, and of course we've obviously seen a lot of volatility as well at the start of the week, then maybe we will start to see it acting in a slightly more rational manner. But I think the movements and the action of yesterday has certainly aided the gold acting in a more normal manner. The Federal Reserve, in a decision which was taken ahead of a meeting 2 weeks before the actual meeting itself, cut interest rates by 50 basis points. This extended the moves that we've already been seeing building in the US dollar, as markets were already pricing in some aggressive action from the central bank, but not necessarily outside of a meeting. So we saw the dollar continue to pull back in the aftermath of this surprise announcement, and that really boosted gold. That gave gold that leg high that it's so craved over the course of the last couple of days as it's looked to find some stability. Now we're trading back at around 1650, and don't get me wrong, I don't think this is necessarily the point in the markets where we necessarily start to see it continuing to just act rationally all of a sudden. The markets are not acting rationally, and therefore you can't bank on gold necessarily acting rationally. But the fact that we are still seeing periods and blips of risk aversion in the markets, and I think this is going to continue to still be a volatile week, but the fact that that's now being underlined by a weaker US dollar and bets on a more central bank action from the Federal Reserve, potentially even as early as the next meeting in 2 weeks' time, could continue to be supportive for gold in the medium term. Ultimately, while this is an extremely volatile environment, and while that can cause disruptions and dislocations in the markets, just like we've seen over the course of the last week, this is still a bullish market for gold. We are seeing central banks around the world cutting interest rates, the Bank of Canada potentially following suit today after the RBA and the Federal Reserve, among others. We are still seeing slower global growth. There is a huge amount of uncertainty still in the market. All of these are bullish, do contribute to the bullish environment that we are seeing in gold. The difficulty, as I say, we're having right now is we are seeing dislocations as a result of the excessive volatility and uncertainty that has spiked over the course of the last week or so. But gold is heading back in the direction you would expect, and if we can see a break and a hold above 1650, then I wouldn't be surprised if we start to see eyes looking up towards that kind of $1,700 level. But again, it is still worth noting this is an extremely volatile and extremely uncertain environment, and I don't expect that to change over the course of the next few days, or maybe even over the course of the next few weeks. So while this continues to be a bullish environment for gold, I think we are seeing a strong element of uncertainty around the movement, and we are likely to continue to see dislocations from time to time, which make this extremely challenging.